Hello, everyone. Jesse Webb, Traders Pro. Market conditions, bullish in a bull market, continuing that overall uptrend. 13.45 is that current rank, continuing to slope upward. We had a little bit of a pullback the other day and then just more upside yesterday. Momentum has pulled back down into this buy zone. And if it could stay right there while we go through any type of consolidation or counter trend, that would be ideal, just so we're not seeing a panic type sell off. If we can see an orderly sell off where things just kind of consolidate at these levels and allow for a new base to establish for more upside, that's going to be the most constructive price pattern for the market. Breadth is extreme to the upside. Also needs a little bit of time here and a little bit of a counter trend to move that back into a sustainable zone, a sustainable uptrend zone. Sentiment also ticking back a little bit. So conditions right here over the next 10 days typically are pretty quiet with, or at least low volume because of all of the market or all of the holiday activities that are happening. People just tend to tune out and check out a little bit here, and just so volume can be a little bit lighter. The overall buy-sell ratio, we are still in this upper range. We're currently sitting at 4.8, which essentially means that if you mouse over this, you can see 31.65 on the buy side and 6.59 on the sell side. So it just means we've got essentially 5-to-1 in the database, 5 buy or uptrends for every 1 downtrend. So real solid buy-sell ratio, positive breadth right here. But as we've mentioned the last few updates, this extreme level, just the level that we're at right here, is starting to squeeze back. You can see this last sell is just a little bit higher right here, and these areas are just not sustainable. They can last a while. This bearish trend right here did last. It was about right here. We started looking at it for a reversal, and this last one really was kind of that flush out last downturn. So we'll see if we get maybe a pullback and then anything towards the upside, and then have them start to work back together again. That could go into for the remainder of the year. But this area, when this is wide like this, when we've got market conditions as toppy as they are, essentially it just means being aware of portfolio management, how big of a position you're taking onto new positions, and how you're managing the loss, any type of losers in the portfolio, and stop losses. So essentially those three things are going to be it's what we look for in market conditions, not necessarily to do something, but how we're managing what we do have and how we're managing what we're putting into any additional new trades right here. So just be aware of that market condition right here. Let's also look at S&P 500, where we've got take a little bit better look at that overall chart here. The 6-month time frame, you can see that sell-off bar that we had right here. We just turn to move back up. So if we can create a little tight range, maybe come up and come back down, and we can pull all the way back to that 460 range and still be within a really nice overall uptrend. And if that sell-off can happen slowly and kind of orderly and work its way back down, creating a little bit more of a retracement, that could give a really good springboard level for new upside. We're just too extended now to be able to get more springboard from this upside without some kind of a pullback. And that, not to say that can't happen, and we don't necessarily want to be aggressively bearish either. We just want to be aware of the fact that this was the bottom of the trend, this is the top of the trend, and we've had no retracement at all based on our levels right here. We've got all of these levels now within this overall uptrend. The first and most important level is the momentum level. So the momentum level is essentially when we've got the top end of the trend, the bottom end of the trend, and we're maintaining this upper quarter of the chart pattern. That can be our volatility zone. We're fine with this kind of volatility all the way back to this zone, and that can still allow for a pause and an opportunity for more upside from there. So it can get choppy inside of this range. We may see another new high. I know that we're very close on S&P 500 to all-time highs. I believe NASDAQ and Dow have taken those out. But still really bullish right here with this overall breadth and price pattern in the markets. If we take a look at some of the other things we focus on each morning, bonds are one that we also wanted to be paying attention to right here at these levels. We have a really significant resistance area right here at this 99 range where we're just drawing this line across here, and we've had this low, this rally in bonds, which means interest rates have been coming back down. So it also is in a location where it could retrace and pull back, create a little bit better base for more upside on bonds, which would mean more downside on interest rates. Those are really the biggest talking points recently are interest rates and inflation. They're going to continue to be going forward, and so we'll keep an eye on these bond prices and bond charts as we do our updates each day. Let's jump over to sectors and see what we've got going on here. If we had any kind of changes, we did have a few tick down to downtrends. They've moved back up with that move yesterday, and I think we're going to see a lot of that right here where we're just watching to see which of these overall sectors ends up cracking in this overall trend and leading things lower. Currently, again, right now, it's just that upper range of trend. Most of these sectors are in solid uptrends and just looking for any kind of a pullback right here. We don't necessarily have to wait for that. We can still continue to add into portfolios as we do and watch for opportunities to be moving higher. The commodities, if we watch for oil and gold, we've got USO, which we've been focused on here in this range. Let me just pull in this perspective, and I'm going to move into a 6-month time frame as well. So we've got two different levels right here on oil where we're bouncing up into this range and pulling back, this range being this area right here. So you can see this bottom one. Let me just turn the volume off on this one, get a little better picture here. So this retracement area, this support zone back up into this zone. So all of these lines that are drawn, we're connecting these high points. We're just connecting the current trend on that time frame. So a 1-year time frame, and this is the current trend. As it's retracing, it's connecting to that overall trend. So this is still our trend. That means this is counter trend. And when eventually we're going to get a bounce, it dipped all the way down into this last zone, this 786 zone, found some support, and now it's rallied back up. And that, again, that stair step location of these zones where you're getting the pullback, the support area, and then things are moving back up into this area here. That's how trends begin, but you can also see this overall downtrend running into some resistance area right here at this zone. And so some consolidation here in oil, but it is working off this base. I know there's some issues happening with the supply chain channels. And that may affect oil prices as well. Different wars and geopolitical issues that are happening obviously will affect oil, because remember, oil is simply a commodity that is controlled by supply and demand. It's not a company. It doesn't produce. It doesn't generate anything. It doesn't create earnings. It's just a commodity. And the only thing that can control its pricing is supply and demand. So if there's supply and demand imbalances, that will typically move oil pricing. And at least at this point, it's stuck right here in this zone. Let's jump over to muscle stocks. The first one on the list, I'm going to skip over. That actually was a split that's been adjusted. It still actually looks pretty good, but the two better patterns on this update, we've got OSCR, which is a nice looking pattern. The overall uptrend on the 1-year time frame, you can see how smooth those trends are, and those work nicely within the overall system. When we're dealing with just these nice clean reversals, you get an uptrend, you get a retracement, solid bar here up 11%, and this could have some legs. Let's take a look at volume on this one, because it did have a spike here higher than the prior day. When you see a confirmation bar, if we can get added volume, that's just additional confirmation that trend could be sustainable by a larger group of investors, traders. So keep an eye on OSCR, and then also let's look at CAMT, which is another nice. This is a good solid. If it could just close up above this area, that's a really nice base inside of the momentum zone here, where you've got this range and consolidation inside that range, confirmation bar, really nice volume here as well on CAMT. So a couple ideas for you to consider today. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.